our industry is not black and white. Underwriting is certainly not black and white. It is an art, not a science. And so that was both the challenging part and the exciting part.
All right. Episode 18 of The Deal Ranch. Zack Devier, thanks for coming on.
Absolutely. Thanks for having me.
I appreciate it. I know this came together rather short notice and we're complete strangers. This happened off a cold call last week, but thanks for having me in your Greenville office here. It's amazing. We just got to tour the office and see everything that's going on here. I know you just moved in, but very great location. Thankful to be here. But intro on yourself. So you're the founder of the company, but currently chairman and CFO. There's been some changes in the last couple of years, which we'll talk about. But if you want to give an overview yourself, role at the company, and then we can get rolling here.
Certainly. So, yeah, I started the company in 2006, ran the company as a CEO through 2018, brought in a CEO at the beginning of 2019. At that point, I stepped into a chairman role. Spent a couple of years focused on some other things, really being involved at the strategic level for the company. Stepped back in at the beginning of 2023 into more of a day-to-day role, serving in the CFO space, essentially handling all the finances for the company. Still serving my role as chairman, and that's where we're at today.
I love it. Before we dive in and we can really unpack the business here, but brief overview, you guys provide a plethora, and I don't want to miss any of them, so I'll let you do the overview, but a plethora of financial services in the underwriting space, in the loan closing space, anything pertaining to really borrowing money for apartment deals or commercial assets, right? So can you provide an overview of Armada before we get rolling?
Sure. So we're fairly full service from the beginning of a real estate transaction through the end of a transaction, with the exception of servicing. And so on the ownership side, we have a due diligence department that goes out and does due diligence for a potential acquirer to help them understand exactly what it is that they're buying. Then moving to the lender side, we underwrite the transaction. We provide insurance reviews. We provide closing services. And then in the third-party realm, we provide zoning reports, PCAs, property condition assessments, as well as ESAs, environmental site assessments. Once the transaction closes, we then move into the asset management piece of our business. And so we provide asset management services for lenders as well as owners. And so on the lender side, think assumptions, consents, the things that the borrower has to come back to the lender for during their hold period.
Yeah, interesting. Well, love to get into it. So before obviously building this beast here, so in school, you went to college for real estate and finance. How did that journey begin? Was it something at home you got exposed to early on? Like a lot of people don't really know they want to, be in real estate, especially in college. So how'd that happen?
So I was actually a finance major and took a real estate class, just part of the curriculum at Georgia State, and just loved it. And so at that point, I changed my major to real estate and finance, and that became my focus. So it wasn't really a background; it was just got exposed in college and ran with it.
What did you get exposed to? Was this like a Rich Dad, Poor Dad that someone gave you the book of, or was it a real estate course? Like what did you enjoy most about real estate? Obviously being a really broad term, especially to a college student.
Certainly. So I think what really got me was a discounted cash flow model that we had to build to determine the value of a company. And so, we had worked on some of those types of things in finance, but I just really enjoyed the real estate component, that you could touch it, that I could go out and see a property. And our professor at that time was exposing us to transactions happening in Atlanta. So we could go out and see the deal that we're talking about in class. And so it just caught the bug.
I love it. So after school, was it always the plan to get into underwriting? Like what made that? How did that transition come to be?
So I was working through school in the professional environment. So I began my commercial real estate career in a commercial real estate appraisal firm, when I was a sophomore, maybe early junior year. And so it was kind of a natural transition. I worked there. We worked on some projects with some folks that ended up recruiting me to what was really essentially an asset management firm. Went to work for that firm and enjoyed it, but got an opportunity to underwrite a couple of deals and really enjoyed that a lot more. And so by the time I graduated, I took a job. I was recruited to GMAC Commercial Mortgage. And so that was my third job in the commercial real estate sector. By the time I was graduating college, and that was an underwriting job. And I think for me, being part of what was a sizable transaction, 20-something-year-old kid, and you're looking at a $10 million transaction, and you're part of it, and you're helping make a decision on which way it goes, and that was just exciting. It was kind of a rush, and always a very detail oriented guy, and so that fit very well into that career path.
I love it. So, is GMAC, is that the term, or GMAC?
GMAC Commercial Mortgage, yeah. They'll forever be GMAC to most of us in the industry.
So, when you get there, what were the loans that you were underwriting at the time, and then what assets did they support? Was it just solely multifamily, or
no? So it was a plethora of transactions. So I went to work for their small loan program, which provided financing for a wide variety of commercial real estate transactions. Yep. I would say multi was probably the least amount of experience that I got there. Lots of retail, certainly some office, some hotels, really across the gamut of commercial real estate. Mm-hmm. I certainly did multi, but it just wasn't the largest segment. Certainly, I would say retail was probably the largest segment. I left there, went to Standard Mortgage. Standard was an agency lender, so Fannie, Freddie. Don't think we were doing any FHA at that time, but so primarily Fannie, Freddie. Yeah. Lots of conventional and affordable housing transactions.
What do you think early on, obviously, being in the underwriting space, just as a recent college grad, you have a lot of folks that maybe go into more service-based jobs, like even at a big finance company, they may be on the client service side, servicing loans maybe, or in a call center. So being hands-on early on in that career, what do you think was the hardest part to learn about underwriting these massive deals? Like, what do you think was the hardest to conceptualize about, working in a deal or working Excel all day to see if this deal works or does not work? Because there's 1,000 moving pieces for each transaction.
So I think you just hit the nail on the head there with that comment. So, what makes our industry somewhat unique is you can't plug the variables into a box and have it spit out and tell you this is the loan amount, right? Like, there's so many strengths and weaknesses to a transaction that offset each other, whether that's borrower financial strength, property location, property condition, property age, tenant base. Any one thing can change that needle one direction or the other. And for one transaction, a risk may be okay because it's mitigated by other factors within the transaction. For the next transaction, that same exact risk may not be okay because there's not enough other mitigating factors. And so I guess to sum that up, our industry is not black and white. Underwriting is certainly not black and white. It is an art, not a science. And so that was both the challenging part and the exciting part, and still is.
Yeah, absolutely. Well, at least it needs to be if you're going to stay in the business.
Right.
So how did you progress over time? So even before agency started or Armada started, you went to another senior underwriting job, and then a deputy chief underwriter at another company. So like what kept you moving? What kept you interested along the way? And how did those other jobs open up?
Yeah. So when I left GMAC and went to Standard Mortgage, Standard was actually bought by Credit Suisse and became column guaranteed. And so there wasn't actually a transition there for me personally. But at the time of that transaction, I moved into the deputy chief role. Mm-hmm. And so I was responsible for making sure that we had enough staff to handle the workload. And this was a time when the market was exploding in a good way. Pre the actual explosion, right?
That's right.
So the positive explosion leading up to the crash, it was very difficult. It's very difficult to stay staffed. Our sister company down the hall, Column Financial, we were Column Guarantee, they were Column Financial, and they were CMBS lender, and they were outsourcing a significant amount of work and seemed like a great model. And so we attempted to do the same, struggled to do so, struggled to find the expertise in the market. And so I thought that sounds like a good business plan. And so Armada was born.
I love it. So before we dive into the business plan, the biggest question I have is why exactly do people outsource asset management or even underwriting, right? Is this critical component of me being the bank or even a non-bank lender signing off and guaranteeing, so to speak, or even not guaranteeing, but say, we're going to lend you this money and outsource it. So you're subbing out the risk. Like how do people do that? Why? How common is that? What is the essential value in doing that for?
Certainly. So across the nation, areas of the country ebb and flow as to how many transactions are occurring, right? Even within the same area of the nation, you could have a particular lender that is ebbing and flowing in their own right? And so it's a pretty substantial waves of business come. And so it's very difficult to staff for the top of those waves. So lenders typically outsource. There's a significant number of lenders. I don't know the statistic, but sure. I would say the vast majority outsource to some degree. And they're giving us the assignment of doing the due diligence, of summarizing that due diligence, pointing out the risk and the mitigants. Ultimately, they're making the decision, right? They're reviewing our work and making the final decision on what they want to lend. And so our job is to make sure that they see all of those issues, they see them in a timely manner, they see them in an accurate manner, and that they're able to make those credit decisions in the same sense that they would if they have someone that they've hired in-house.
Sure.
Right? There's not a tremendous difference if you think about it. If you're lender X and you hire a team of underwriters in-house, they're going to do the same thing that Armada is going to do. That team is going to put together that underwriting package, and they're going to send it up to the folks that are going to ultimately make the final decision, the credit committee.
Yeah.
Right. And so we're serving that purpose. We're not serving the credit committee purpose, and that's an important distinction.
Yeah. Interesting. This episode of The Deal Ranch is brought to you by Reed's Jewelers. Reed's has been in business for 77 years. Since 1946, they have been devoted to customer service and quality. Visit Reed's for a large selection of fine Swiss timepieces from Omega, IWC, Breitling, Grand Seiko, Tudor, and Tag Heuer. With fast free shipping and 24-hour customer service, Reed's is the perfect gift for this holiday season and any moment you want to remember. Find a Reed's store near you or shop online at reeds.com. That's REEDS.com by clicking the link in the show notes. So when you start, it was just the first line of service was just underwriting.
Just underwriting,
right?
Yes.
And then now you have a plethora of services. And it was also just you as well in 2006, or did you immediately bring other people on? Like, because how does the model underwriting very labor intensive? Service.
It is. I actually hired someone day one.
Oh, beautiful.
I hired an analyst and began hiring relatively quickly. I would say by 2008, we were probably 8 to 10 people. So it definitely is very labor intensive. And even in the beginning, before we hired that many direct employees, there was contractors, so there was kind of a group of us that all worked together, and we would one group would maybe originate the transaction, and then we would all work on it together, right, to get it across the finish line.
So before 2009, you have a good bit of growth. I think you get to $1 million in production, and production being fee income?
Fees.
Okay.
Yes.
So where does the fee come from if you're outsourcing the underwriting? Just on an origination fee that you guys are getting from underwriting the deal?
So we don't actually participate in the origination fee, at least not directly. That may be where, but no. So we're paid a transaction fee, right? We're paid by the lender to underwrite the transaction, whether if the deal closes or not.
Sure.
Right. Whereas origination fee is paid if the deal actually closes, right? Yeah. So that would not be in the best interest for the lender for us to have interest in, the deal closing. So we're paid a fee regardless of closing of the transaction.
That's a really good point. That's kind of funny. Okay, so in those first 3 years, you start scaling, you get to $1 million in production, which is a huge mark for any business, right? Making your first $1 million. 2007 and 2008 is obviously mixed in there. So how did that change day to day for you with the business? And when did you're the one underwriting a lot of loans that are coming? Did you see it just a drop off? When did you? How did that go over time?
Certainly. So for us, the CMBS work evaporated within about a 3-week period. It was a very quick transition. The agency work maintained through that period, and then once the dust settled, there really was only. Well, I shouldn't say only one, but there was very few choices for multifamily transactions. The agencies were the leaders of that, right? They were certainly the best at it. They had the expertise, and what they didn't have necessarily, at least the agency lenders, was quite enough staffing to accomplish it. And so we were there for that. And so we were lucky to have that expertise. That's what we were built on. We were originally designed to be an agency underwriting platform, right? And so we had been in the CMBS space because that's where so many deals were getting done, but we were really designed to be agency. And so we made that transition, and we certainly had months in there in the beginning that felt like the end of the world, but it didn't take long for that to completely reverse, and we actually grew on an annual basis. We grew through the entire crash. Despite the fact that on a quarterly basis, sometimes that was not the case. But overall, we grew through the whole process.
One thing you kind of said in there, and obviously the labor shortage or cyclical nature of it obviously was a competitive advantage for you, or drives business to you. But how doesn't that just get rolled onto you? How did you stabilize the ebb and flow of having underwriters and staff? Does that just get rolled back to you as a challenge as well? Or was there an easier way to mitigate since you were only doing underwriting?
To some degree. Okay. If we were only underwriting for one company in one region, then we would have that same ebb and flow. But by underwriting for a dozen different lenders and across the entire nation, we were able to smooth that ebb and flow out to some degree. And so, not to say we don't ebb and flow, we certainly do.
Sure.
We track our volume against agency volume, and certainly we're not, there's still ebb and flows, but we're ebbing and flowing with the entire market instead of one segment or one lender or one geographical area or one product type, right? So
that makes sense.
It smooths it out.
So after 09 through 11, you have another big growth cycle. So production triples, headcount is starting to scale significantly as well. I'm sure they go hand in hand for you. But as you start to tack on services, is it this organic piece where you're oh, maybe we can add this in? Or is it strategic, we need to add loan closing next, or we need to add asset management? So how do you end up with these 13 different services or 12 that you have today? What is the process of that happening year over year?
So the vast majority of service adds were a client need, and we saw an opportunity to help a client. They come to us with we have issue X. What can you do? We put together a product, put together a process, and we help that particular client, right? So, but once that's in place, now we have something that's sellable, and so we can take that same process, that same product to other clients. And so, for instance, zoning was born at a client meeting, talking to a friend of mine in the business, and he said, "Have you thought about zoning? We really have struggled with our zoning reports recently, and think you guys would do a great job. You have the underwriting background because zoning, so much of how we analyze zoning is through an underwriter's lens. And so came back.
In what regard do you mean by that? Like just... Yeah.
Certainly. So zoning is what zoning is, right? But how that affects a transaction is determined ultimately by underwriting guidelines and underwriting opinion. And so if the zoning report is catered to that point of view, then it makes it a lot easier for the underwriter to absorb and apply it to their transaction.
Interesting. In this client you're speaking about, in this scenario, being the operator, not the lender?
No, that was a lender client.
That was lender. Okay.
Made that recommendation. So another prime example, acquisition due diligence, was a lender recommendation to one of their clients who was buying a big portfolio and needed assistance to do the acquisition due diligence. And so had a conversation, put together a team, went down and performed the service. And when we were finished, that particular now long-standing client, we've been doing business with them for about a decade now, but said, we'll always outsource this going forward to you guys. And so we did. And through word of mouth, that business really, really built from that original project.
So prior to bringing it to more modern day, and I want to kind of break down all of the services you guys have right now when we get there. But so over the first 10 years, you add Matt, the current CEO, in 2019. But what was the hardest part over the years? So 2-3 years in, you're going through, the financial crisis. After that, obviously, lenders are still struggling for a plethora of years trying to make deals work, and there's a lot of loans that are upside down. But it seems like you guys were able to grow and scale through that crisis. What were the other hardest parts in growing throughout the year, or just you as a business operator and owner? What were the hardest part in scaling the business those first 10 years or so?
So certainly the hardest and the best part of scaling a service business is the people, right? Ultimately, we're not selling a widget, we're selling expertise. And so building the right training programs, getting the right people in the right seats and training them to be experts and provide premier service is the most fun challenge and also the most difficult challenge.
Sure. Interesting. So what led to the addition of Matt in 2019? So you're a founder that's also running the company. That's a hard role to step out of for a lot of folks. What made that the right strategic decision for the company?
Certainly. So I was at a point where I felt like we needed some expertise that had taken a company from that 50-person company to a 100-person company, right? If you look at my history, my work history prior to Armada, I managed maybe a dozen or so people. So I was in territory that I had not been in. Right. Also, my friends in the industry and primary contacts were starting to retire or move into positions where they were not our direct contact anymore. So bringing in somebody with sort of fresh friendships was helpful as well. And so Matt was the perfect guy, right? I mean, I had known Matt for many years. He's an exceptional leader. And I knew that from working with him. He's certainly proven that since he's came on board as well. He's just done an outstanding job. But he was heading up the agency underwriting for Capital One. He was on the Fannie Mae Advisory Council. So he certainly had all the contacts that we needed, but again, also all of the expertise that I knew he could really do some great things with the company. Yeah. And so, brought him in.
Well, he came in at a critical time, too, especially for you guys being a big multifamily underwriter in this huge boom that we've had. One of the bigger questions I have is those current market conditions and how you guys handle that growth, because it's been quite a bit. But before that, all of our services right now, if you want to break them down, and we can tackle it however you want to, but just so anyone can follow along here. So you have underwriting, asset management, site inspection, loan closing, due diligence, and then this insurance piece as well. To you, how do they, how do you describe your own company? Because you do so much for so many different people. You do so much for the loan side or the lender side. And then you do so much, obviously, for the operators themselves. you're at this point, this outsourced one size fits all for anything. If you need to touch a loan, you guys can probably help that process. Or for an operator, no matter where they are in operating their deal, right? Whether they're going to refinance or, potentially build something else, you guys have a service everywhere in there. It's kind of just a fascinating business from top to bottom. So like how do you see all of these tools fitting together? And yeah, I guess just breaking down the current spot you're at with the company. It seems like you almost have every application you need for the time being, plus vendor flow, which we can get to as well.
Certainly. And so that's you pretty well said it there. I mean, our goal is to be a full service commercial real estate company that provides services to both lenders as well as owner operators. And so all of our services are built around those functions, right? We want to provide premier service across the board. And so for our owner operators, that primarily means due diligence, right? It's if you're you're an apartment acquirer, right? So if you're going to go buy 300 or 400 units, you want to know what am I buying exactly, right? What's going on inside of those units, and what's going on inside of those lease files, and how are the maintenance? How's the maintenance been handled? Is it is everything up to par? And so we provide that service, and I think it's helps our clients tremendously to negotiate their transaction or to make sure that they're buying the property that they think they're buying. Yeah. On the lender side, we want to be that provider of anything that they need, short of originating the loan, right? They have to bring the loan in the door, and at this point in time, short of servicing, we're not set up to service loans, right? So, but anything that requires commercial real estate expertise, right? And so that's where the underwriting piece comes in. Certainly where the closing of the transaction comes in, right? These are all things that the leaders of Armada did in our prior careers, right? When I was coming up, the underwriter was the closer, the zoning provider, the insurance reviewer, right? We did all of that. And so now those are all segmented into different departments and in many cases outsourced. And so so that's where everything was built from, right? And so as you mentioned, the insurance side, that's a growing business for us. And it's an interesting one right now with Florida and all of the coastal towns and Texas, and just the massive increases have been challenging.
Yeah, and that trickles up into every regard for your business. So if we can run into that then. So 2018, 2019, obviously our COVID years, people flood the Southeast, but all of these different markets that experience exponential growth. Coupled with in the Southeast for sure, you have this short supply. So it just evolves into this huge multifamily market. We have cheap credit, and then that just leads to a ton of loan originations and people trading deals all the time. At what point do you, and this is kind of really, I guess, at the birth of Matt's career here too, which is kind of neat, but how does that impact your business and evolve over time? When do you guys see oh wow, were you flooded with volume of loans? How did you balance? Did you have to scale a ton of employees? What were those days like in that first little part of the boom?
Certainly, yes. So that was Matt's, the beginning of his, and we didn't necessarily anticipate quite the boom that occurred. I don't think anybody did. Well, maybe somebody did. I'm sure they made lots of money off of it if so, but so we were built to scale, and we're able to do so pretty well across the board, right? Our acquisition due diligence team just exploded, right? It was 5 times the amount of work from probably 2018 to 2021. Just a massive surge in transactions, and so I was really proud of the team and how well they scaled through that. We spent a lot of time and a lot of effort building technology that would help us through that process, and working with other technology vendors that were fantastic. Built a great relationship with them. So where were we? I think you were saying we.
Okay, yeah, you guys were saying you were built to scale over time. So, like,
Right.
was there a challenge in when all this work is coming in that you have to hire and onboard new employees during that time? And then you also, this is your product, your brand, right? People are coming to you for quality product or service, rather. You have to onboard these people, and just onboarding any other employee takes 60, 90 days, 30 days, however, to get them ingrained in your culture, but to know the quality of work you want them to do. So, how is servicing that amount of influx? What are the challenges, and like how did you guys said you were built to scale? How'd that end up functioning?
So it worked well. The good news is we had a lot of talent at the top of each of these groups, and we had solid training programs in place. So we were able to bring new hires up to speed very quickly.
Awesome.
And it differed across departments as to what that scale looked like. For instance, if you look at zoning was able to scale certainly by training and bringing in new employees, but they also substantially improved their process during that time period as well, which allowed them to do more reports in a shorter amount of time, right? So more efficiently. I won't drag you through every single department, but we, each department was handled differently, but we were able to continue premier service and
besides the obvious question here of like you mentioned due diligence, but was there anything else like of your services, not that they were underperforming, that had a huge spike in requests during this explosion? Or was it just everything that had a huge spike in requests?
No, I think the only service that we had that was multiples was acquisition due diligence, right? Okay. So if you look at the numbers for the agencies on the transaction volumes, they were steadily going up. Yeah. But they weren't tripling. Yeah. Right. Like they were going up in a pretty reasonable span over time. And so we mimicked that very much. And so I think that's why, like underwriting, for instance, it would have been very difficult to triple the amount of underwriting that we do year over year, right? That would have been a big challenge. But the increase that we experienced was certainly manageable.
How do you guys do such quality work on the underwriting side in all of these markets that you service? Do you have to hire people that are local and regional to that area, or people that just are good underwriters and know how to source the correct data and look at the data? Obviously, if you spend enough time on the deal, you can learn that market. But like that seems like a big challenge, I would think, but it seems like you guys do it so well. So how's that possible?
Yeah, so that is a challenge for all lenders and as well as us as service providers to understand all of the markets across the country. Yeah. But you're right, it's very data driven. Mm-hmm. Getting out on site is helpful, seeing what's around. Sometimes we're able to do that if we're underwriting a transaction. Mm. If we're not, then we're using all of the tools that you can imagine to figure that market out, whether it be Google Earth or certainly CoStar, all of the market. Information providers. Yeah,
interesting. So then this market we bring to this current date here, certainly a lot of things have changed. So we have this explosive growth, but now we have our material costs, supply costs for everything's going up. So it kind of makes value add a little bit different or challenging. We have massive insurance. We have everyone starts buildings. We have a ton of new supplies. We have this rent. Not challenge, but some markets obviously have tapered. Some have a slight decline. Some are still inclining. But regardless, however you look at that, that operating incomes are down a little bit, for a lot of people, right? Depending on the market or the deal. So a lot of people suspect maybe there's going to be larger distress in the market just to how quickly rates have risen. You guys, as being a really good partner to the lenders and to the owner-operators, how do underwriters in this environment, what are they looking for in loans to maybe detect early distress besides delinquencies? Is there a certain DSCR that you're looking out for and then putting it on a watch list? Are there any other metrics that you're trying to get in front of or sift through to make sure, hey, this loan is not in jeopardy or in trouble, or for the operator, the same as well? How do you guys detect? What are you looking for? Are you changing your operations at all to help both sides, I would say.
Certainly. So on the asset management side, it's just that, right? It's watching those debt service coverage ratios, watching the expense ratios change. I mean, just like any company, right? You're watching those margins, watching those ratios across the operating statement to see what's moving, what's changing, and how's that ultimately going to impact. Where we've seen a real pickup in assignments for us, as well as just the industry as a whole, is in property condition, both from a lender's standpoint and an owner's standpoint. Our engineering department has been quite busy on just property conditions as an asset management tool, not necessarily new transaction volume.
So you're saying you're seeing the difference in property condition.
So their difference may be
delta.
Maybe a delta, but I think there's a focus on it right now. What we're seeing is a big focus on property condition, and so it's fair to say that if you're an operator and you're being squeezed in all of these areas, right? You're being squeezed on insurance, you're being squeezed on your capital cost if you're on a floating rate deal or you had to refinance in these times, and so there's some concern that where do you make up for some of that squeeze? It could be how well you maintain the property, right? Yeah. I think that would be a natural occurrence. And so lenders are very aware of that, and operators are very aware of that from what's going on within their own portfolio. And so we're seeing lots of different clients dial into property condition, and we're benefiting from that by having our engineering platform.
Yeah. One thing that clicked, and I'm sure you think about this all the time, but just maybe 10 years from now, how valuable your experience is on every facet of the business, because you're getting intel and data points from your own inspection team doing walkthroughs where you're seeing what's happening on the ground, but then you're also underwriting in these same markets. It's like, what is really the compound value of that year over year, where you're seeing your data points are coming in your door for a different line of service you have that's valuable in a whole other line of service here. It's pretty powerful business you've got. As far as insurance goes, we talked about this. Where else besides the evaporation or partial evaporation of a chunk, right? Because it's a lot of people's biggest operating expense, or certainly now it can be. Besides cost of capital, is there going to be opportunity, or do you see there's certainly the downside that makes everything hard, but I guess where else do you see that in your business affecting? What other lines of service does insurance percolate and make it tougher? Obviously on the underwriting side, mainly on underwriting, but any other avenue that you see it kind of trickle up into for insurance costs rising up?
Certainly on the asset management side, right? It's creating stress on the asset management side. The insurance business, our insurance business, is getting more and more difficult, right, to accomplish, because of course, as those premiums go up, then you're trying to find ways to keep those premiums from being so high, and coverages are changing. There's a lot of moving parts there, and so that's helpful for that business, because it's more opportunity to assist our clients, right? There's more to assist on. There's more of an issue to tackle. As you mentioned on the underwriting side, certainly all of these changes are going to affect underwriting. I think there's, at some point, these issues lead to transaction volume. I don't think we're there quite yet, but at some point, I think there will be an increase in transaction volume as these deals start to trade hands again.
Yeah, I think so too. On each episode, I usually try to encompass one sort of deal story. Now, you've acquired other businesses, you've created new lines of service, you've underwritten thousands of deals and $15 billion in transactions in total. So I don't know where you want to take this, but is there a line of service acquisition? Is there a deal that was significant in your career that we can kind of walk through, or you can share the story on?
Sure. So I would say our biggest transaction as of late was the acquisition of F3. Yeah. So they were an engineering firm. now we are all an engineering firm. That company was headed up by Randy Davis, and Randy still leads that group for us. And Randy is an absolute professional, expertise in this industry, very well respected. We do a lot of work for the agencies directly,
Yep.
And that's driven by Randy's expertise and ability and the team that he's built there. And so, heavy attention to detail.
Yeah.
It's been a great acquisition. Things are going great. We're growing that business, and little did we know how timely the transaction would be for the property condition concerns that have risen over the past 12 months.
So this was 2021 you acquired them?
No, we acquired them in 2022.
Oh, okay. How did that come to be? How did you come across them? And then,
so Randy and I have been friends for many, many years.
Okay.
And actually in the early days of Armada, when we had a new sort of cohort of underwriting analysts, we would bring Randy down to teach them how to really look at a property condition and environmental site assessment, so that they understood more than just the tables, right? They really understood how an engineer was looking at these things. And so, like I said, we've been friends for many years. I had told him at a conference probably 6, 7, 8 years ago, if you ever want to sell, please call me first. And so he sent me a text one afternoon and said, hey, remember that conversation about 7 years ago? Like, here's that text. Let's talk. And so we went down that path, and it's great. It's been a great opportunity.
When did that text come in? In 2020, in 2021? Like, how long did the deal take, or the acquisition?
No, I would say it was probably either early 2022. I think it was early 2022. It didn't take us that long to execute.
Wow. Did all their employees come in-house here then too?
They did. So we now have an office in Troy, Missouri, because that's where they reside. And so we didn't try to move everybody to Greenville. I don't know how many people would have gone for that, but yeah, so we're still in Missouri.
Cool. So to speak, in wrapping up, and we've touched on a plethora of market conditions and also your operations in every line of service here. And I've said it a couple times, but you guys have what seems like almost a complete tool set of services that touch this business as a whole. Is there any service, asset class, or market that you guys haven't played in, or service that you don't have, or deals, or maybe even loans that you don't underwrite or asset manage at all, that you haven't done that you want to? Is there anything else that you would like to add to make it a more complete business or offering in your mind?
So I wouldn't necessarily say there's anything that we have not done, because I think we've touched just about everything, and we continue to. But we are heavy multifamily, and we love that, and certainly don't want to see that shrink, but would love to add to that more of the other services. So I would love to see us do more CMBS transactions, debt fund transactions, bank transactions. So just a diversification of what we're doing, and that's really across all of our service lines, right? We're heavy multifamily in all of our offerings, and so would love to see that expand into more product types.
I love it. And then, as far as right now, this market's certainly tumultuous in a couple different ways, but what are you guys focused on right now? Maybe just day to day, like just doing obviously consistent quality, good work for this lower volume potentially of deals that you have, but is there anything else that you're focused on this year or next year that, like, top of mind?
Really just expansion of our existing product lines. Yeah. So doing that a couple of ways, right? So from a marketing standpoint, we're marketing to a wider audience. Yeah. And from a process standpoint, we're looking at all of the technology and all of the enhancements that we can make and to our process internally, not just on the technology side, but even just the way business flows through our company. We're in many ways touching the same transaction from 4 or 5 different departments. Yeah. So we're working on things that allow faster transfer of information amongst those departments on a single transaction, right?
Interesting.
So, yeah.
before we wrap up, one of the most interesting things that you guys have going on that we didn't touch on would be vendor flow. So it's on the website. It seems like such a service and a value add to streamline all of these different vendors that have to work on a transaction. So can you break it down of what exactly it is and then how people can use it, and then who typically uses it too?
Certainly. So going back to kind of what I said at the beginning about how new services are born, right, organically. And so what we found is that within our clients, our lender clients, they're managing 4, 5, 6 third parties at any given time. And so there's information flow, there's scheduling of site inspections. It's a lot to manage that. And so that's people, that's someone to sit in that position, and it's a position that tends to not last very long. They tend to learn and then advance up, and so it's a constant training and retraining in that world. And so inside our lenders, and so we thought, here's an opportunity, right, for us to manage this process. We're providing several reports as well. So some of that is managing ourselves, assuming that they're using us for zoning and environmental and engineering and even insurance for that matter. And so that lessens the load, right? Because we have tools in-house at Armada to help us manage those things. And so vendor flow was born. Your typical who's using it. So lenders, certainly, agency lenders. But really, it's applicable across the lending world.
So they can plug in, go through the website, fill out what they need, and then it kicks off where it's sending bids out or for those different vendors to bid on the work, and then comes back to you, which is kind of interesting.
Yeah.
Fascinating. In wrapping up, unless is there anything else that we missed on Armada as a whole, the story, lines of service, what you guys are focused on now? Is there anything that we missed?
So the only thing I would add is we're really focused on where we can add value right now, on the underwriting front, on the asset management front. But let's take the underwriting front, for instance. We've all, and this is at the property level, at the lender level, and really across all industries, right? We've all had to experience this significant increase in wages, right? Difficulty staffing. And so at our lenders, we've done the math. We've worked with some of our clients to do the math and try to determine, like, what does it cost to underwrite in-house, right? And so the range that we're estimating, and this is just real simple, how many loans were closed that year, and then what did it cost you, right? What was your salary, and so divided by number of employees. And so the estimate that we've gotten is anywhere from 25 to 40,000. That was kind of pre 21, right? Since then, those costs have increased pretty drastically. Now probably north of 50,000 per transaction, 50 to 60,000. And so, because of the way we're structured, where we're at, the smaller overhead that we enjoy, we're way inside of those numbers. And so I think that's a value that we're bringing to the table right now to our lenders, to be able to solve some of that problem for them.
Yeah, especially in a tight environment where there's not a lot of margin on any side of a transaction. It's a huge value to save a few basis points there. Last question in wrapping up. Anyone in really any business, but especially in real estate, it's heavily relationship, but it's heavily gated by knowledge, right? Each of these sectors that people can go into for business, they're very technical and they're very hard to learn. Was there anyone in your life or throughout your career that was a big mentor to you, or that you learned a lot from, maybe in early underwriting days, or you as an entrepreneur? Like, who do you think helped you the most along the way in your career?
So that's a difficult question. I've had several that have been very helpful throughout my career, but I would say the one that has been the most impactful to me is a gentleman by the name of John Beam. He hired me at GMAC, Commercial Mortgage. He was the CEO of our group, of the small loan program. John and I have remained friends for the last, all of those years, 25 years now. Wow, that's insane. But he's helped me at every step along the way. So anytime I've had, challenges with Armada, he's typically the first call.
Yep.
And certainly has been there through it all.
Mm-hmm.
We're still doing business together now, buying real estate together. So
love it.
Yeah.
So in wrapping up, how can people, the best way to get a hold of you guys and your service? So armadaanalytics.com, and then they can just go through a service request to get info on any service? Correct?
Absolutely, or feel free to give us a call. We've got phone numbers, email addresses on the website, and so certainly love to hear from you.
Beautiful. Thanks, Zach. Appreciate it.